We turning off the waiting room, Sergeant Weinberg?
Yes, I will.
All right, it is noon Mountain Time, 1300 Central Time. I'm Sergeant Parson, the Sergeant at Arms. Welcome to our 12th and final meeting as a council. This is our general meeting, general membership meeting. I am going to open it up. Today we have two great presenters. We have retired Chief Gudgel. She was the AETC Command Chief. And we have retired Master Chief Tony Guzman. And they're going to be our mentors of this month. So I'm going to turn it over to both of you. And then after that, we'll get into our general membership meeting. So Tony, Chief Gudgel, over to you.
All right, thank you. I appreciate the invite too. This subject that we're going to teach is I'm very passionate about because 27 years in the Navy and I did not know any of this information and I wish I would have. But let me share the screen real quick. Share. All right, just want to make sure everyone can see that. Everyone's good?
Raj.
Okay. All right. Again, my name's Tony Guzman, retired Navy Master Chief, did 27 years. I retired here out of San Antonio back in 2018. And then Julie here, Command Chief, AETC. She just retired a few weeks ago. So now we work for a veteran-owned organization and we have a education nonprofit called the Alliant Education Foundation, where we go around and we teach about the VA home loan benefit for a couple of reasons. One, it's severely underutilized. It's estimated only 15% of all veterans utilize their VA home loan benefit. And two, there's a lot of bad information out there. A lot of people think you can only use it once. A lot of people think there's a certain credit score requirement. Fees, what fees you should pay, what fees you don't have to pay. So we're going to get real quick into it, about a 45-50 minute brief covering the VA home loan benefit. Now, our goal as an organization is that we want to ensure that anybody who's worn the cloth of our nation has the opportunity to own a piece of it. We truly feel that way. If you fought for this country, you should own a piece of the land that you helped defend. Now, we're going to cover the when, who, how, and why of the VA home loan benefit. But first, we're going to go with a little bit of background and the history of it. This was first created back in World War II in 1944, right? Franklin Delano Roosevelt, he created this under the original GI Bill. And he did this so those service members coming back from World War II had the opportunity to purchase, a home coming back from the war. The VA pamphlet 26 Tax 7, that is the guidelines to the banks, lenders, and credit unions on how to write loans towards the VA home loan benefit. All right, it's a very thick manual. It's a boring read. If you want to download it, you can. You could just Google it, VA pamphlet 26 Tax 7. Chapter 4 is probably the most important chapter. It's the credited income qualification chapter. So if you have feel the need to take a look at that, you can, like I said, easily downloadable on the internet. Now, the VA guarantees the loan. Okay, I just want to make sure everyone understands the VA does not lend money. They guarantee the loan. They guarantee your loan 25%. So how does that work? Let's say, for example, I buy a home here in San Antonio for $200,000. After a couple of years, I decide, you know what, homeownership's not for me. I'm going to walk away, or I get into a financial situation where I have to walk away. Then that bank, lender, credit union, they're going to have to foreclose on that home. Now, when they foreclose on it, they only need to short sell that home for $150,000. Because the VA is guaranteeing that other $50,000. So that's how that 25% works. And with the VA guaranteeing your 25%, you don't pay private mortgage insurance on it. So if you were to utilize FHA or conventional, if you don't have 20% of your own money to put into the game, then you're going to have to pay private mortgage insurance every month until you get to that 20% equity. And we're going to cover that as well here shortly. The Blue Water Act back in 2019 had a few changes to the VA home loan benefit. The first and biggest change to the VA home loan benefit effective January of last year is there's no cap on VA loans now. So what exactly does the no cap mean? The no cap means that if you have full entitlement, meaning you have never used your VA home loan benefit before, or if you used it once and sold it and you got your full entitlement back, then there is no limit to the amount that the VA will guarantee, okay? That you still have to credit and income qualify for whatever loan you want. Let's say you need an $800,000 loan to buy $800,000 home. You can now get that as long as you credit and income qualify. The VA is just saying, yeah, they're going to guarantee it up to that much. I've seen loans up to 1.5 million guaranteed by the VA. So that's a big deal now. So if you have that option to utilize that to go over, 500 grand, then that's a good option for you then for the no cap. Now, a little bit of who's eligible. Now, if you're in any of the services, active duty, if you serve more than 90 days during wartime, then you're eligible for this benefit. We've been a country at war since August of 1990. So if you were active duty during this time, and if you served at least 90 days or more during this time, then you are eligible for this benefit. If you know somebody that wasn't eligible or wasn't in during wartime, then they would have to do 181 days during peacetime. Now, reserves and National Guard, they're also eligible. They weren't always, they were grandfathered in back in, I think it was 1993. In order for them to be eligible, they have to have a few things, right? They have to have at least 6 years worth of service or prove 6 years worth of service. And that's based on the point system. So at those weekends that they do, the 2 weeks a year, they accumulate points as they're going along. They have to show enough to equal 6 years worth of service, unless they get activated. If they get activated under Title 10 orders to go to a deployment, let's say Iraq or Afghanistan, then all they would need to do is 90 days. President Trump just signed a bill before he left office stating that any National Guard or reservists that have been activated to support the COVID-19 relief, they are also now eligible after 90 days. So reservists are a little bit different than active duty, but they still are eligible. Now, who else? If you were discharged for any kind of service-connected disability whatsoever, you're eligible for this benefit. Spouse, prisoner of war, missing in action. And to me, one of the most important categories is that Gold Star spouse, right? The unremarried spouse of a veteran who died in service or from a service-connected disability, they are eligible to utilize this benefit. And not a lot of them know about it. Why? Because, when their significant other passes away, it's a traumatic time in their life, and all the information that they're getting, goes in one ear, out the other. So if you know of a Gold Star spouse looking for a home and trying to use conventional or FHA, tell them, ask them, hey, did you ever think about the VA home loan benefit? Because you are still eligible, as long as they stay unremarried until the age of 57. Why 57? I don't know. That's what's in the guidelines. The VA picked that number out, but they are eligible. Now, who can finance? The veteran themselves can put their name on the loan, of course, the veteran and the spouse, and then two veterans can also be on the same loan. So if you have a brother-sister combination, or father, son, mother, daughter, anything like that, best friends, I wouldn't advise the best friends situation, because you're going into a big financial transaction. But siblings, you're eligible to do that. Now, this is what the request form looks like. You can fill this out, you can send it in to the VA office, and you can hope somebody sees it, processes it, and gets your certificate of eligibility back to you. Or you could do it the easy way. The easy way is you get on va.ebenefits.va.gov, and then there's a section on there that covers housing. And in that section, you can download your COE very easily. It takes like 5 seconds. Then this is what the certificate of eligibility looks like. It's going to tell you and the bank or the lender or whatever credit union you're working with, whether, your branch of service, your entitlement code, your name, whether your funding fee is exempt or not exempt. We're going to cover the funding fee here shortly. And if you have a current VA home loan, currently. So in this situation, Johnny Sample does have a current home in Pennsylvania for $300,000, right? Now, I want to point out, you see in the middle of the screen where it says this veteran's basic entitlement is 0. I've seen on some occasions where a service member would go to a a bank, credit union, or mortgage company, and they try to utilize their benefit again while keeping the current home, and the bank or lender sees that and says, hey, you don't have any entitlement left, so you can't utilize your VA home loan again. If you're hearing that, or if you see that situation, I would not use that bank or lender or whoever they're using, because they don't know about the second tier of bonus entitlement. You can have multiple VA home loans open at the same time. And I'm going to show you how that's done. But if they don't know about it, then I wouldn't trust them to do my VA loan, and I would pick somebody else. Now, what can be financed? A lot of people think you can only do a single family home. It couldn't be further from the truth. You could do mobile homes, fourplexes, duplex, condos, new builds, construction. All of this is available. If you heard that this wasn't available, it's probably because that bank, lender, or credit union does not offer the VA loan on that specific product. Not a lot of banks and lenders will offer VA loans on mobile homes because they think it's risky. Duplexes and fourplexes, they're big here in San Antonio. Personally know a service member that bought a fourplex where the other 3 units were already rented out. He's living in one, and then he's going to live in that for 1 year, and then he's moving out. Now, the VA loan is a owner occupant loan, so you have to intend to live in that home for at least a year. All right. You can't turn it into a rental automatically, but after a year, if you decide you want to keep that home or turn it into a rental, you can move out, put a renter in there, and create some passive income. This benefit wasn't designed to do that, but there's opportunities to do it. You just have to be very careful on how you do it, especially in a situation we're in now with COVID-19. A lot of people lost their jobs. If they're your tenants and they can't pay the rent, you can't evict them based on the law right now, but that mortgage payment still has to be paid. So if you try to utilize this to generate that rental income, you got to remember that you have to be financially set in order to make those payments in the future, right? The status of the home, it has to be in good condition, okay? A lot of people have been watching HGTV and they think they're going to go and buy a rundown house, put $100,000 in it and sell it for $500,000 and make all kind of money. You can do it with other loan products, but you won't do it with this one. Why? Because the VA is guaranteeing this loan 25%, right? They're putting their name on it. They want to make sure that that home is in good condition. So they're going to send their own appraiser out there, independent appraiser. They'll go out there and check on the home. They're going to go off what's called MPRs, minimum property requirements. Basically a checklist on making sure that the home is safe and sound. All right. A lot of people have heard that the VA appraisals are hard, and they were told that to go conventional because the VA appraisals are hard. In reality, they're no more harder than regular conventional loans. They're just certain things that the VA has to be required to check. Like heaters, for example, they have to check that. So if somebody's telling me, they don't want to do VA because his appraisals are hard, I would second guess that, because me personally, I want to make sure my house is safe and sound. I would much rather have a VA approved appraiser out there than a regular one. Now, why use the VA loan? A few reasons, right? The biggest one is no down payment. So you're able to get into a home without putting any money as a down payment. Whereas if you were to use FHA or conventional, you would have to at least put 3% down, right? There's no private mortgage insurance with the VA loan, like I told you about earlier. Private mortgage insurance is just an extra payment that you're going to have to make if you don't put at least 20% of your own money down. The private mortgage insurance is usually about 1% of the loan. It doesn't go to your equity. It doesn't go to your principal. It just goes to an insurance company just in case you don't make your payments. And you're going to have to make that extra payment every month, like I said, until you get at least that 20% equity in there. There's no prepayment penalties on VA loans. There might be some prepayment penalties on conventional loans, at least probably 6 months prepayment penalty if you pay it off early. Why? Well, banks and lenders, they make money off the mortgage by the interest, right? So when you buy a home, the first few years or all of the first years are primarily interest first. So you're paying a lot of interest every month. So that's how they make their money. If that's gone all of a sudden, then that's, they don't make anything. So they're going to put a prepayment penalty on some of the other loans. Dual military entitlements. I don't know if there's dual military in this group, but dual military is huge with the VA loan, because the spouse, you have an entitlement and the spouse has an entitlement. So you can buy home number one with spouse number one entitlement, home number two with spouse number two. And then if you have enough left over and you want to buy another house, you can actually combine that. And I'm going to go over that here shortly as well. But it's a big, big advantage for dual military. Now, like I said, we teach this class. I've been teaching this class since 2018 when I retired, and I've been up to Florida, San Diego, a lot of places up to Fort Hood, just teaching about the VA home loan benefit. Because like I said, I did 27 years. I did not know any of this information, and I didn't have this information to pass down to my sailors. So we make it a point to go around and educate, but we hear a lot of bad information out there. People have heard about the VA loan through their grandpa or their dad or their uncle, and it's just a lot of bad information. The biggest one we hear is, I can only use my VA home loan benefit for my first home, or I could only use it once, right? It couldn't be further from the truth. If you buy with the VA loan and sell it, it gets out of your name, you got full entitlement. You can buy, sell all day long and continue to use the VA loan if you want. Or if you buy and decide you want to keep that home, if you have enough entitlement left over, you can utilize your remaining bonus second tier entitlement to purchase another home. And I'm going to go over that here as well. We were up in Fort Hood about 2 years ago doing a newcomer's brief, and a young soldier came up to us afterwards and said, man, I wish I would have known this, because I just closed on my home 3 weeks ago, and I put 5% down on the FHA loan because my uncle told me that I could only use it once, so I was saving it. So that's the type of bad information that's out there. And that's why we're doing what we're doing. Now, so that second tier of bonus entitlement, this is how that's going to work. So second tier and bonus entitlement, if you have a current home and you want to buy again, you're going to be you're going to have a limit. All right, there is a cap if you already have one and want to buy another one. The cap limit is going to be whatever county that you decide to buy in. There's a county loan limit, so you can easily Google that too, VA county loan limits to 2021, and they'll give you a list of every single county and their limit on the entitlement. All right, 98% of the country is going to be 548,250. You're going to have some counties that are a little bit higher, some on the East Coast, some in California. Whole state of Alaska is around 700,000. Hawaii's around 700,000. Okay. Now I'm going to use here in Texas, where we're at, the county loan limit is 548,250. So if I decide to purchase a home here in San Antonio for $250,000, I'm essentially taking that 250, subtracting that from the 548,250. That's leaving me with about $298,000 to utilize again to purchase another home, utilizing this benefit, no money down. Now, again, that second home that you're going to buy has to be for your primary residence. So you have to intend to live in there. So let's say, for example, I have that home in San Antonio for $250. I keep it. I get transferred to Killeen. I'm going to buy in Killeen. Houses are cheap over there. Let's say I buy a house for $180,000. So that's how I have 2 VA home loans, right, under one entitlement, and I still have some remaining left. Now that remaining left is not that much. And if you needed more than that 298, you can go over any entitlement that you have. You just have to remember that for every dollar that you go over, you will have to pay 25% down. All right. So if you go over by 100,000, you're going to have to put 25,000 down. Why 25%? Well, the VA is guaranteeing their portion 25%. They want to make sure you're guaranteeing your portion 25% if you go over that entitlement amount. So that's basically it. Dual military entitlement. Here's what I was talking about. Hold on. Dual military. All right. Assuming that the county loan limit is 548,250, right? Again, there's some places that are higher. So you might have a little bit more flexibility in other locations, but let's say you're here in San Antonio, spouse number one puts the home number one under their entitlement. Let's say that's $180,000. They outgrew that house, or they're transferring and they want to utilize the VA home loan benefit again while keeping the home under spouse number one entitlement. So they put a renter in there, purchase another one under spouse number two's entitlement. Let's say that's $200,000. So now they have 2 different entitlements, 2 different homes. let's say they transfer again or have to upgrade or downsize or whatever, then they can utilize either the remaining entitlement of spouse number 2, or in this scenario, they're going to utilize this remaining entitlement of spouse number 1. Let's say that home costs $250,000, right? So now they have 3 homes, 2 different entitlements, and they still have a lot left over. So if they transfer again or decide to buy home number 4 and utilize the first 3 as rental income, they can do that, and they have up to 348 on spouse number 2, 118 under spouse number 1. If they need more than that 348, let's say they needed a $450,000 home, you can actually combine the remaining entitlements from spouse number 1 and spouse number 2 and combine them to purchase home number 4. So in this case, they have 466,000 left over to utilize again. I know a couple, lieutenant colonel couple personally here at Port San Antonio. They just purchased their 5th home utilizing the VA home loan benefit. Yeah, 5 homes. So they have 4 rental homes and then the primary residence. Again, if you choose to do this and go that route, you just got to be very careful. Make sure you have the financial stability to do that. Second biggest thing we hear is I can't use my VA loan because I don't have a credit score of 640 or 620, right? That pamphlet 26 Tax 7 Chapter 4 is the credit and income qualification chapter. Can somebody just unmute and tell me what you think the minimum credit score requirement is per that guideline?
580.
580? Anyone else? No one else? All right. Well, here's the true answer. In the guidelines, Chapter 4, there is no credit score requirement. However, there's no bank, lender, credit union on earth that's going to lend you money without a credit score. But why is this a problem? So there's a huge auto insurance company here in San Antonio, right? I don't know if you ever heard of it, but they have a street that leads to it called USAA Boulevard. If you call them and say, hey, I want to utilize the VA home loan benefit, they'll get your record, right? Pull your credit report. If you don't have their credit score requirement, let's say it's 620, right? If you don't have a 620, chances are they're going to tell you you don't qualify for the VA home loan benefit, right? Which is a wrong answer. Them telling that service member that service member is going to go on telling everyone else that, hey, no, hey, you can't utilize a VA loan unless you have a 620, right? Because I got turned down because of that. What they should have told him was, you don't qualify with us. You should shop around to different lenders, because other banks, mortgages, companies, they may have lower credit score requirements. And there are companies out there that go all the way down to 580. I've seen some at 550. So you just have to shop around. When you're buying a mortgage, when you're buying a house, you got to remember, this is the most amount of money you're ever going to borrow in your life. Okay. You need to shop around different banks, different mortgage companies, different credit unions to get the best rate, best product for you and your family. All right. A lot of us military are loyal to certain companies, but I'm telling you, some of those companies aren't the best when it comes to mortgages. So you have to shop around. Don't be afraid to shop around. Once your credit report hard pull one time on a credit, like for example, you're buying a mortgage, you get your credit pulled by the first company, you have 45 days to get your credit pulled again, and it will not affect your credit. All right. So don't be afraid to do that. You're allowed to shop around for the best interest rate or best product for you. Now, there's always a funding fee. We always hear that. There is a funding fee involved in the VA home loan benefit. I'm going to cover the percentages here shortly, but there's 2 ways that you don't pay the VA funding fee. The first way is if you have any VA disability whatsoever. You guys are active duty, so you're kind of far away from getting that disability, 10% disability waiver. But if you have a Purple Heart Award, that is another way that you are able to not pay the funding fee. So 2 ways to get around the funding fee: VA disability and then awarding a Purple Heart. Now the VA funding fee, let's talk about that for a little bit. Now that is an extra percentage, like I said, that you're going to have to pay. It just goes into a pot of money that runs this whole program, and that money is being used for in case somebody defaults on their loan for that 25% guarantee, right? So the first time you utilize this loan and you don't want to put any money down, you're going to pay an extra 2.3%. Your sixth, seventh, eighth, second, third, fourth, whatever, 3.6%. If you do have 5% down, you could choose to put 5% down. If you're in between 5 and 10%, you can knock that interest, the percentage down to 1.65 on both. If you have 10% or more down, you can knock it down to 1.4% on both, right? If I had 5% available, I would consider that. If I had a funding fee to pay, I would consider paying 5% to knock that down to from 2.3 and 3.6 to 1.65. I don't think I would put any more money down just to knock it down to 1.4. I just don't think that's the value is there for me. Now, there's a well-known financial guru. I'm not going to mention his name, but he always tells military buyers to not wimp out and utilize the VA home loan. Why? I'm not sure. I think because, you know, some of the companies that are sponsor him, they have high fees when it comes to VA rates. But we're going to go over an example. I'm going to go over an example of a $500,000 home, comparing funding fee against PMI. All right. So $500,000 home, 680 FICO score. On the left side, I have a conventional loan. On the right side, I have a VA loan. Don't fall in love with these rates. Rates change every single day. These aren't today's rates. But historically, the VA outperforms conventional. So that's why we have the VA at a lower rate. Conventional side at 3.5%, you're going to put $25,000 down, knocking the total amount down to $475,000. That's only 5% down. Okay. Now, the PITI, which stands for principal, interest, taxes, and insurance, on a 3.5% at $475,000 is going to come out to $2,532 per month. Then you're going to tack on that PMI that I was talking about. So on a $500,000 home at knocking it down to $475,000, you're going to be paying about $412. So you add that together, your total payment is going to be $2,945. On the right side, you have the VA loan at 2.75%, 2.9 APR. Total loan amount is going to be $5,011,500. So an extra $11,500. Why? Because of that funding fee. You have to remember about that funding fee. But at that percentage rate, at the lower percentage rate, the PITI on that loan is going to be $2,488, right? So 0 PMI. So your total payment is $2,488. So you're actually going to be saving quite a bit of money. Now, yeah, it's going to vary based on the size of the house or the value of the home, right? How much you borrow, but you're still going to be paying PMI if you don't put 20% down. So when somebody's telling you, hey, don't use the VA loan, use this loan, use the conventional, use the first-time buyer, just ask them to show you the numbers. Just say, hey, you know what? I hear you. Can you give me a cost comparison? Show me the actual numbers, what it would be on a conventional loan versus a VA loan. Get them side by side, right? If the VA wins, take the VA, which 9 times out of 10 is going to be VA. But if conventional wins, then take the conventional. You just need to make sure you're doing the best thing for you and your family. Now, how valuable is BAH? I didn't realize how valuable BAH when I was in, but luckily I did purchase a few times utilizing the VA loan, so I had my BAH invested. But BAH is non-taxable, right? The government is giving you non-taxable dollars, and at the end of the year, you could deduct your mortgage interest and your property taxes against your gross income to tell the IRS you make less money, so you could get more taxes back. Does that make any sense? Non-taxable dollars given by the government to buy real property, deduct mortgage interest and property taxes against your gross income, tell the IRS that you make less money and get more taxes back. It's a powerful thing. The reason they do that is to encourage American home ownership. So BAH, I'm going to cover a 25-year career of a service member that comes in married or independent, right? That still happens, right? 25-year career. We're going to follow them and add up the BAH. Now, these duty stations are high, but I'm going to tell you exactly where we got these duty stations from. So first 2 years is the E2. They're going to be in San Diego, California, where the BAH is ridiculous over there. It's $26.91 for a total of $64,000. They become an E3. They stay in San Diego, another $64,000. So in the first 4 years of their career, right? Single, married, one dependent, this young E3s, maybe 22, 23 years old, they're getting close to $130,000 of non-taxable BAH. And do you think that 23-year-old or 22-year-old is financially educated to utilize that money the right way? Probably not. When I was in E3, 22, 23, when I was in Pensacola, Florida, they told us we could move out. Me and 5 friends got the cheapest place we can get. We utilized as little BAH as possible and then wasted that extra stuff or the extra money on stupid stuff, right? Because that's what young kids do. We didn't have that financial education. And I don't think they have that financial education here today as well. Going back to the scenario, going to E4 to Honolulu for the BAH is 2823. You can see the amount totals there, right? To Millington, Tennessee, back to Honolulu, to Yuma, Arizona, Twilight Tour, and look how much money in BAH they were given. $736,000. We have a command sergeant major Army type that's working for us out of Killeen. He just retired. He calculated his. It came out to over $1 million of BAH, and he never bought while he was in. He just purchased his first home. So that's a lot of BAH the government is giving you. So we're trying to first understand this benefit, and 2, try to utilize that BAH in a good way. Now, is every duty station a good place to buy? Absolutely not. Absolutely not. But every duty station is a good place to actually take a look at the data, take a look at the numbers, and see if it makes sense for you and your family. I will tell you that. Now, again, if this was taxable, you would have to make close to $1 million in order to get that much money. All right, that's a lot of money, again, that the government's giving you. And where do we get these duty stations from? Because they're high duty stations, San Diego, Honolulu, right? Our coworker and founder, that was his dad's tours. 25 years in the Marine Corps, right? Vietnam veteran, Desert Storm veteran. He ended up living in a budget motel weekly, just barely making it before his son moved him back to Hawaii, where he eventually died of throat cancer. So this is another reason why we're so passionate, is we want to help veterans to not put them in this position, right? There's a lot of homeless veterans out there. They're all over San Antonio. I'm pretty sure whatever base you go to, there's going to be a homeless veteran out there somewhere. Now, would this education have changed their life? We don't know, but at least they would have had that education. And that's what we're trying to get. We want to make sure as many people as possible has this education for them. Now, what will you do with your BAH? If you're getting out soon, one thing you want to know, if you are transitioning out, most banks, probably all banks and lenders and credit unions are going to want to see at least 12 months left on your contract in order to purchase a home. All right. So if you're going to wait to month 9, you're going to be a few months short. You can still borrow, but you're going to need a job offer letter with the amount on it in order to utilize that. Because remember, they can't use your BAH anymore when you're getting out, right? They're going to use your retirement pay, which is significantly lower. You can't use your disability because you haven't got that yet. So if you're going to wait until you transition out, just be aware of that. Me personally, I would start out, if you know you're in a location right now where you're going to retire and you're about 15 months out, then I would go ahead and start that process now. Don't wait until less than 12 months because you're going to find it to be very difficult to do that. BAH is the same thing as rent, right? Rent money is the same thing when you get out, except you don't get that BAH. We tell people somebody's mortgage is getting paid off the first of every month. It's either you paying yours or you're paying somebody else's, right? You either invest in yourself and your generational wealth to pass on to your children, or you invest in somebody else's home where they're going to pass that to their children. It's up to you. Now, why don't most people buy while they're on active duty? There's a lot of reasons. The number one reason we hear is home ownership is expensive. I will give you that here in Texas, property taxes are expensive. A lot of people are worried about broken down, appliances, broken down pipes, stuff like that. But that's where you have to do your due diligence and get a home inspection. A home inspection is different from an appraisal. Okay, a home inspection is for you. So that's for you to hire somebody to go and make sure that that home is safe and sound. The second thing you should do is to get a home warranty, right? A home ownership warranty, to where they cover all the appliances in case something breaks down. So my eyes, home ownership as expensive has a different meaning. My dad's retired Air Force. He retired out of Keesler Air Force Base. So I grew up right outside Gate 7. My dad did not buy his first home until he got out. When my dad got out, and this was in 1976, he was working 2 jobs when he got out. So I only saw my dad at dinner time. So in my eyes, right, my dad was working 2 jobs, just bought the house. He had to pay for the house. So in my eyes, I thought home ownership was extremely expensive, and I never thought that I would become a homeowner. But it is attainable. It's easily attainable, especially if you're in the military and getting that BAH. Second thing we hear is, I'm only going to be here 3 years. Okay, yeah, I get that. You're in the military. You transfer all the time. But how long are you going to be at the next duty station? And the next duty station? And then the next duty station? And then the next thing you know, 15 years, 22 years, 27 years just flies by quick, fast, and hurry. And if you're not investing in yourself someplace along the line, you may be losing out on a lot of BAH. Again, not every duty station is a good place to buy, but every duty station, you should at least take a look at that data, okay? One of the biggest things we hear, people are just scared because they're scared of the unknown, right? It's the biggest transaction you're ever gonna make. Home ownership, you know, it's scary if you don't know how to do it. If you don't do it right, it can squash you like a bug. So you just got to make sure you do it right. We call it fear, false evidence appearing real. All right, I'm a God-fearing man. That's the only person that I fear is God. In order to alleviate that fear, we tell people to do the data. So you need to make sure what you're going to do is, before you sign your name on the dotted line, whether it's a lease, whether it's living on post or a mortgage, you need to do the data. All right. So what we tell people is, before you sign your name on the dotted line on a mortgage, you know exactly how much that mortgage is going to be for the next 30 years. Unless you refinance at a lower rate, your payment's going to stay the same over 30 years. So take that, calculate that against how much it's going to cost you to rent. Because I will tell you that mortgage and rent are about the same. So if you're paying rent, like I said, you're paying somebody's mortgage. So compare those, and then compare how much it's going to cost you to live on post, because that's not free either. Right? That BAH comes in on block A and then goes out on the next block, right? So you don't even see it, but you're still paying it. Now here on Fort Sam, I think E5 over 3 years is $63,000. So if you live on post or if you are renting, $63,000, when they tell me home ownership is risky, how much do you think that of that $63,000 they're going to get back at the end of 3 years? Zero. They might even lose their security deposit. So that's 100% chance you're going to lose all your money, and you tell me home ownership is risky. All right. Yes, there is some risk involved, but it's not 100%. So just take that in comparison. So what you want to do, again, take a look at how much your mortgage is versus how much it would cost you to rent. All right. Now, when you're buying a home, you should always use a realtor. A realtor is your advocate, okay? You don't pay the realtor when you're buying a home. They get paid off the sale of the commission on the home, okay? So hire a realtor, have them do a rental market analysis. What a rental market analysis is they could tell you exactly on that home you're gonna buy. They could say, you know, your home right now, if something happened and you had to rent it out today, you can rent it out for this much money. They could get all the comparables and tell you that. That's a number that you want to know before going into any kind of mortgage transaction. So you know, in case something happens and you had to put a renter in it, you know exactly how much you're going to get. So if you're going to get, let's say your mortgage is $2,000 and you, let's say mortgage is $2,000, you can rent it out for $1,900. All right, then you're in a good spot. You know, $1,800, you're kind of getting to the point where you might not consider it. But $1,900, $2,000, $2,100, if you're paying a $2,000 mortgage is great. But you also have to remember a couple of things. Property management fees, it's usually 10% of the rent amount. So you want to make sure that unless you're going to do it yourself, you want somebody to take care of your property. 2, right? So property management fees, and then homeowners insurance for rentals, might be a little bit higher. So you have maybe, let's say $200, $300 extra that you might have to pay. And when I tell people that, they tell me, you know what, it's not worth it. I'm not going to pay an extra $300 for somebody else to live in my property. But those same people are driving around in $60,000 cars with an $800 car payment or a $600 car payment on a vehicle that depreciates every day. So you're willing to tell me that you don't want to put $200 to $300 into yourself, but you're willing to make a $700 car payment on something that depreciates every single day. It's just a different mindset, right? So, and again, when you're buying a home, make sure you're doing all this data analysis. Now that covers the brief itself. Now I'm going to cover, okay, you decide you want to use it. This is what I want you to look out for when you're going through that home ownership process or home buying process. First thing you want to do is you want to find somebody that you trust and has a lot of knowledge. There's some people out there that just aren't that savvy on the VA loan. So make sure you're talking to somebody that does a lot of VA transactions. 2, you want to get pre-approved and not pre-qualified. There is a big difference. You could get pre-qualified over the phone. I could tell you how much I make. I could tell you how much debt I have. Just know that if they didn't run your credit report and they didn't ask for documents, that number they give you is not a true number and it can get you in trouble. Make sure you're getting pre-approved. In order to get pre-approved, you want to you have to be able to turn in these documents. Certificate of eligibility, that should be the first thing you check. The DD-214 and points total, if that's applicable to you. You guys are active duty, they're going to want to see W-2s, they're going to want to see your LESs, bank statements, tax returns, bankruptcy if applicable, and divorce decree if you're paying any kind of child support and stuff like that. Now, is any of this hard to get? All of this is very easy to get. You can download it and you can add it to an email attachment and send it in. I tell people all the time, if you can't get this stuff in and download it and send it off, then you have no business buying a home. Home ownership is not for everybody. You're just not ready, right? You're not responsible enough. 3, then the lender is going to take everything, run the credit and get that VA loan analysis and get that approval for you. Then you're going to find a realtor. Make sure your realtor is very savvy on the VA loan too. To be honest with you, there's a lot of realtors out there that just don't understand the VA loan, and they're forcing their clients to go into a conventional loan or FHA loan because they just don't understand the process, or they're hearing, about the VA loan, about what other agents are telling them, and they don't hear it from the truth, from the guidelines, right? Make sure your realtor is very knowledgeable on the VA home loan benefit, right? Make sure, ask them how many VA transactions they've done. Ask them, and if they're a veteran, right? I always like to use veterans, right? But ask the hard questions. Ask questions from this brief just to make sure they understand the VA home loan product. All right, you're going to submit your offer. The seller is going to accept your offer. You're going to complete your full application with the contract. They're going to send it to processing. Processing is going to do all their due diligence, check the numbers, make sure everything is right. Then they're going to send it to, then they're going to order appraisal. So the VA is going to talk to their independent contractors to go out and do an appraisal. Remember that appraisal, they're going to go off the NPRs, right? That appraisal gets sent back to the VA, and then the VA is going to issue an NOV. The NOV is basically a notice of value. What it's telling you, and bank lender is going to say, hey, the VA is going to set the home at this value, right? And if there's any minor repairs that need to be completed before we guarantee this loan. So in the situation that the NOV comes back higher than the sales price, then you're good. You have instant equity. If it comes back lower than the sales price of the home, you can either walk away per the clause that you're going to sign, or you can ask for a reconsideration of value to get some more comps comparable to get that value up, or you can you can try to get the seller to negotiate down to the value of the home based off the VA. So those are the 3 options you have when it comes in lower. Now, they get the NOV, your loan officer is going to get the NOV, they're going to send it to underwriting. Underwriting is going to do one last review and just to double check to make sure everything is correct. Then you're going to get to the closing table, and that's where all the funds get transacted, and then you're going to get your keys. Now, the closing time, a lot of people say, oh, well, VA is so slow on the closing time. It's not the VA, it's the lender. All right. From start to finish, from the contract accepted to the closing, it should be around 30 days. All right. If you're working with a good company, it should be around 30 days, maybe 34, 35. There's some companies out there that are taking 45 to 60 days to close. I've seen some like 90 days to close. If you're working with somebody that closes in 45, 50, 60, days, you might have trouble getting an offer accepted. Why? Because in a hot market where houses go very quickly, if you submit an offer and your company usually closes in 90 days and somebody else submits an offer and their company closes in 30 days, I guarantee you that they're going to accept the 30-day offer versus the other one, because they want to sell that home as fast as they can. They want to get their money as fast as they can, right? So just be careful when you're choosing companies. That's one of the questions you want to ask is, what's your average closing time? All right, closing costs. Yes, there's closing costs to any home transaction. I've heard so many people, I didn't pay any closing costs, or I didn't have closing costs. You might not have paid them because the lender paid it, or your realtor pitched in, or whatever, concessions. But there's closing costs to every transaction. These closing costs are in three distinct areas, right? They're title and escrow fees for the title insurance, document fees, recording fees. Then you're going to have prepaids. Whatever county you're going to be in, you're going to have to pay some property tax up front to put into escrow. So when you make your payment every month, it automatically comes out. Homeowners insurance as well. Whatever homeowners insurance company you pick, you're going to have to put a good chunk in prepaids into escrow for the same reason. And the third bucket is going to be lender fees. All right. Now, let me talk a little bit about lender fees. Now, the loan discount points, that's up to you. Okay. When you get your credit and income qualification and you get your interest rate, they're going to say, okay, based on your credit and income qualification, based on everything, you qualify for a 3% loan, right? At no cost. If you want to go down to a 2.75, you can have to pay these points. That's up to you if you choose to buy down, or if you want to get money for closing, you could take a little bit higher rate. All right. So that's how that discount point works. That's up to you in order to buy down the rate. Appraisal fee, that varies from state to state. The VA funding fee we talked about. Let's get over loan origination. Loan origination, a lot of companies charge 1% loan origination. On a $300,000 home, that's $3,000 right off the bat. Then you're going to add in the processing, probably around $395. It varies from lender to lender. $695 for underwriting, an admin fee, application, tax service, flood service. That's a lot of money. Okay, that could easily come out to $5,000. Now, I'm going to tell you a secret. Don't pay them. Those are not required. Okay, do not pay any kind of lender fees. All right, there's two ways banks, lenders, credit unions make money. They make money on the front end when they can convince you, yes, you have to pay these fees, or they make money on the back end when they service your loan every month and they get that interest, or they sell your loan on the secondary market, right? My loan, I purchased with one company. My loan got sold to Wells Fargo. It didn't change my principal amount. It didn't change my interest rate. It just changed who I make my payments to. There is a lot of money to be made on that side. There's no reason they need to rip you off on the front side too and get extra profit. 1% origination, I don't even know what origination is, right? That's a lot of money, so don't pay for it. Ask them to waive it. I will give you a personal example. A guy called me 3 weeks ago in Pensacola. Hey, I'm closing on Friday. This was a Wednesday. He said, I'm closing on Friday. He said, can you take a look at my fee sheet to make sure everything is right? I said, sure. They were charging him $3,800 in origination fee. Everything else was good. And I told him, I said, hey, go back to them and tell them, hey, this is bogus, it's bull crap. I know, because, you know, I got friends that told me this is bull crap, so I'm not going to pay it. He got that $3,800 waived, believe it or not. So they might tell you they can't. It's not they can't, they won't. All right. If you're working with somebody that's going to charge you, the veteran, hard-earned money for lender fees, walk away. There's a lot of companies out there that don't charge lender fees. All right. So be aware of that. Builders. There's a lot of builders in our area. I'm not sure about the area you're in, but here's a couple of things I want you to look out for builders. Again, use a realtor when even when you're going through the builder. That sales agent in the office, they work for the builder. Okay. So that's their representative. You need to make sure you have your representative as well. Remember, you don't have to pay the realtor when you buy. So make sure you utilize them because they probably understand the process a little bit better than you. You want to be careful of the incentives. So what's going to happen is they might say something like this. They might say, if you utilize our in-house lender, we will give you $10,000 in upgrades. All right, just be careful and check the numbers and see where those numbers are coming from. Why do I tell you this? 2 years ago, we did a brief at CMSgt. A young couple came up to us afterwards, said, hey, we're building a home with so-and-so company. Can you take a sheet to make sure everything is right? We said, sure. Took a look at it. They were promised $17,000, right? And it said $17,000 credit on their form, but their interest rate was 5.1% when the interest rate at that time was 4.1. So they jacked their interest rate up 1% in order to pay for that $17,000. Now, remember what I told you about, right? If you want money back, you can get money back, but you have to take a higher interest rate. Well, they automatically gave it to them without even telling them. They were going to be paying an extra $200 a month, right? And the lender was okay doing that to them. So we told them, circled it, send them back. They ended up getting $14,000, but with that 4.1% interest rate. So make sure you do your due diligence. Last thing, the property tax. Here's how property tax works on new builds. The first year, when you're building a home, the first year, the taxes is going to be assessed just on the land, right? The second year, they're going to assess the land plus the home because the home is complete. So your payment might go up a lot. And if your lender and builder is not telling you that, you could be in for sticker shock. My example, I built a house here in 2016. My first year, my homeowner, the property taxes was $800. Second year, $8,000, right? But luckily my builder and my lender told me, hey, make sure you put an extra money in because this is going to happen. So just be aware of that. Last slide, the streamlined refi. If you currently have a home, the interest rate, I would say, let me see. I would say if it's higher than 3.5%, I would seriously call somebody and ask them about the streamlined refi. It's a good program, but you have to be careful of all the junk mail that you're going to receive. You're going to receive so much junk mail, and they're going to try to entice you with the 1.9, 1.75 rate, right? Just be careful because on the fine print on the back, it's going to say, yeah, this comes with like a 2% origination cost and all these other fees and stuff. So just be careful. They're trying to trick you. All that stuff, I would just throw away. They make it look official. It's not from the VA. Throw it away. Call somebody you trust, or work with the person that you worked with before to do your initial mortgage. All right. Don't buy into all that junk mail. When you're doing your streamlined refi, you not only think about how much you're going to save per month, but long-term interest. So if you're going to sell your home, let's say in 2 years, it's probably not in your best interest to refi. Okay, because there's closing costs involved in refi too. So you're going to add some costs onto the balance of the home. So if you're going to sell it in 2 years, it's no reason to, because you're just going to add more money onto your balance. If you're going to keep that home for 4, 5, 6 years, 7 years, 10 years, then it might be a good idea to refinance if you could get at least a 0.5% lower amount. All right. Now, any questions at all about what we covered today?
Wow, that was a lot of information, Tony. And honestly, I've been getting some text messages, some great feedback. We do have some questions. Real quick before we do those, though, I want to echo what you were talking about with the VA IRRL, because I just went through it myself. There are a lot of people who will send you stuff and give you rates. You got to look at the fine print, because some of them are trying to charge you points, saying, yeah, we'll get the rate down to this, because they have to meet certain criteria for it to be VA IRRL. They have to reduce it. Is it a 0.5%?
Yeah, usually 0.5%, and you have to be able to recoup your closing costs in, I think, 36 months.
Yeah,
I think that's it.
So in order for some of them to do that, they try and trick you by, like you said, origination fees or points. So just be on the lookout for that. Sergeant Maverick, you had your hand up earlier. You had the first question. I'm going to turn it over to you to go ahead and ask your question.
Yes, sorry. Can you hear me okay? I'm on the road.
Yes.
Earlier you had at the very beginning, which is why I put my hand up, and then I saw that we put the questions there in the chat about you had like percentages up, and I I'm not sure which slide it was at the very beginning, but I wasn't sure what you were talking about. It was unclear on my end, and I was just trying to understand. Man, I'm sorry. I didn't have the question written down and I got kicked off. So my question feed is gone on the chat.
Okay, was it the funding fee?
It was before the funding fees.
For the
You
funding
had like
fee.
you had two things with percentages.
Was it the comparison of the funding fee versus the PMI?
Maybe.
Let
What
me
I
see.
did
Let's go
learn
back.
though, what I did learn about the PMI, we were using our VA loan right now.
Is it this
Is
one?
that, yes.
Okay,
Yeah.
Yeah.
So I didn't know about the PMI and the P. Yeah, I thought there was
PITI.
something with the PITI. That's an equivalent to the PMI, but it's not, I guess. I might have missed some of what you said.
So the PMI, that private mortgage insurance, that's an extra payment that you're gonna make. Like I said, if you don't put 20% down. So in this scenario, that 25,000 only represents 5%. So they're gonna have to pay $412 every month until they get that 20% in equity, right? The PITI stands for principal. That's based off that is your principal, your interest that you're paying, your insurance, and your taxes included. That's what PITI is.
Would you equate it to not, I mean, money wise, you're still paying some sort of VA. I don't know. You don't want to call it a lender fee, but a VA to use the VA loan.
Right,
So
yeah, the funding fee, yeah, you're still gonna pay the funding fee, correct.
Okay, gotcha.
You just have to take a look at whether do you want to pay the funding fee or do you want to pay $412 every month until you get that 20% equity, which, you know, some cases it's like more than 10 years. So you just have to do your homework and do the calculations.
Gotcha. And you
Yeah.
didn't touch too much on the VA, the EARL or whatever they call it. On the EARL itself, you just said, I mean, it's worth it, and it's something about half a point or a point less, or else you can't get it or something.
No, you should, in order for you to take advantage of it, if you should be able to decrease your interest rate at least 0.5%. If you can't get down lower than 0.5%, the money that you're going to pay, let's say if you're at 3% and you get down to 2.75 and you pay all the closing costs and stuff, it's probably not worth it, right? In the long run.
Right.
So that's why we ballpark, if you could get at least a 0.5%, 0.5% lower interest rate, then it might be beneficial. It should be beneficial.
Gotcha. I'll think of my other question if other people want to go. I'm sorry.
Yeah.
Thanks, sir. This is a lot of good information.
Good. Going back, Master Sergeant, to the mail, I always call them. Every once in a while, I call them. So I call them and ask them questions, and then I talk about the origination fee, and I ask them, hey, can you waive it? And they tell me no, and I said, well, that's funny. Why are you charging veterans, origination fee when I know there's a lot of other companies, that don't charge it? And then they hang up on me. But I do that every once in a while.
Oh, that's smart. Yeah. Literally the moment I moved into our house 2 years ago, started getting things for refinance.
Yeah, about
today.
7 months later, you're eligible 210 days after your first payment, you can refinance your home. So if you refinance already again, let's say, for example, you refi from 4% to a 3.25, 210 days after that first payment on that 3.25%, if the rates drop down lower, you can refinance again. But you just have to make sure it's good for you, because again, you're going to put some more costs on there. So it's a good deal if you're going to keep that house for a long, long time.
Awesome. Thank you, Sergeant Maverick, for the question. Thanks, Tony, for answering that.
Yeah.
That VA EARL, if the timing's right, can be great. I went from a 3.25 down to a 2.25%. So yeah, definitely. And honestly, one of the things, I don't remember if you touched on this, but the differences between conventional and VA loans, typically VAs have lower interest rates on top of the what you were talking about earlier, PMI versus the funding fee. That's that's just giving capital back to the people who are going to back it, right? So the
Right.
PMI is just basically insurance for the lender if you default on the loan.
Yes.
And that's what the funding fee is for the VA, but it's significantly lower. Like you were saying, if you're paying $450 a month, in a year's time, that's what, 900 times 6, 5,400.
Yeah.
Whereas the funding fee is a percentage, and it's all one time only. So let's see. Sergeant Carpenter asked a question about he's thinking about moving to Montana after he gets out, and he's looking for questions in regards to the rules on building a home, new construction.
Yeah.
Specifically for him, he's talking about a ranch. So
Okay. Typically the VA loan, it has to have a property on it currently, right? You could choose to get a builder. There's some places that do a VA one-time close where you can roll in the construction loan and the VA loan at one time. But for the most part, what you would do is you would get a land loan, and then hire a contractor to get a construction loan. And at 90%, at the 90% completion, you can refinance that into a VA loan. That's how that works.
So I'm not going to have to pay for land.
What's that?
I'm not going to have to pay for land.
Okay,
So-
then the construction loan, right? You could go to any bank and get a construction loan. If the bank or lender that you're working with doesn't have a one-time close product, then that would be the route to go. Get a construction loan, and then once the house is almost complete, then you'll refinance that to the VA, because the VA has to assess a property on there for them to guarantee it. So they can't guarantee it unless it's near completion. Now, if you're going to use that property for commercial to make money, VA probably won't let you do it, right? It's just a personal property occupancy loan, so it can't be something that's going to generate you money.
That'll be my retirement home. But
yeah,
when we do that, like my wife just recently went up there and talked to a couple contractors, and COVID has kind of adjusted the market, shall we say?
yes.
So about 10 years ago, my parents built a house, and they paid like I think it was like 260, 265, something like that. And I mean, they have a super fancy house. They have like $60,000 in stone in their fireplace, and
Jeez.
super fancy Wolf appliances and all that crap. That's like, super, super fancy. And they only paid like 265, right? For I think it's right around 3,000 square foot home, right? And I'm wanting to build a 2,700 square foot home, and I'm getting quoted somewhere between 480 and 560. It's a big difference. But
It's called inflation.
Few different. Well, right, but it's not.
That's why when people tell me, "Oh, I'm gonna wait to buy the home," all right, that home that you're looking at now is gonna cost a lot more here in like a year. And the lumber prices are ridiculous right now. I like to do woodworking.
Sure.
I just stopped all woodworking because the prices on lumber is ridiculous.
Sure, no, and I get that. I just like, over 100% inflation in the last 10 years.
Yeah,
That's 10% inflation every year. That seems that's crazy.
right.
And I know a lot of that is, just in the last year or so. But they were the people that we talked to previously were talking about, you got to put 25% down or whatever, to do a construction loan. And then with that, like, we were looking at potentially doing a lot of the finishing work ourselves.
Mhm.
How do you know what the VA's stance on that is? Like, if I got a construction loan and basically told them to frame it up, because the concrete and the framing and
Yeah, you're gonna have to. The VA is gonna check on make sure that all the water fixtures are there, plumbing fixtures. We need to make sure the appliances, the heater's working. It's all that stuff. So it really needs to be pretty much complete.
Okay. Okay. Are they terribly specific? Like, do I need to have it drywalled or?
Yes,
Yeah.
it has to be livable.
Okay. Before I can get the VA loan.
Yes.
Okay. And then my guy that's here with me, Sergeant Flores, he's from Puerto Rico, and he wants to buy some acreage out there and then build a house out there. Is there much difference or any difference on VA loans?
The VA will guarantee that loan as long as it's in a U.S. territory. So Puerto Rico's good. Yeah, but the same process, right? You're gonna have to get a construction loan, and if they don't have anybody over there that does the VA one-time close, get the construction loan and then turn it into a VA loan.
Okay.
Yeah.
Cool. Thank you, sir. Appreciate it.
All right.
Awesome. Thanks, Sergeant Carpenter, for the question. We got another one from our president. Utah's market is so hot that people are only accepting conventional loans with big money down, like 40 to 100,000, or willing to pay over the appraisal value. He says, we were told we could get a home under contract with a conventional and then switch to VA. Can you speak to that?
I'm not really savvy on that piece, but we're same thing is happening almost everywhere, right? People are putting $20,000, $30,000 over and not accepting VA. You could still do a VA loan. You could put into the contract. You could write into the contract, will pay X amount of dollars over the appraised amount, because that's what they're worried about. They're worried about that the VA appraiser is not going to come back as high as, as the price. So you can't put a clause in there like that. Yeah, I'm pretty sure you could do a conventional and then refinance it, but then you're going to come into consideration that, here's the problem with people overbuying, right? You're putting so much money on a house. So you're putting $50,000 on top of, let's say it's a $300,000 home. So you're paying $350,000 for something that's gonna, is appraised for $300,000. So you're gonna be upside down. You're gonna be in a world of hurt like that. So you just gotta be careful. Just make sure, you do in your due diligence. Now, the appraisal is based off the market, and as the market, the sale of the home goes up and stuff, then the appraisal value is going to go up, but it's not going to be immediate.
Awesome. Thank you.
Yeah.
There's the question that Sergeant Maverick had earlier. Just out of curiosity, what was the previous cap when you were talking about the VA cap limits?
So the previous cap, I think 2019, I think 2019 was 510, 400. The year before that, it was like 488, 250. The year before that was like 411. So it's been steadily going up. But yeah, they took away the cap January of last year. So if you can credited income qualify for a $600,000 home, then they'll guarantee it.
Awesome. That's great news.
Yeah.
That's all the questions that we have. We definitely
right.
appreciate you and Chief Gudgel taking the time to sit down with us. This was great information. Like I said, my text messages.
Yeah,
text message have been blowing up about how great this was. So truly beneficial. Thank you both.
Yeah. So we have a 2-hour seminar too that we do like once a month, but it's a little bit more in depth and stuff. So if you want more information on that, we can give you that too. But here's my number. If you want to take it down, if you have any questions in the future, text, call. If you're in the process now and want me to take a look at it and just to see, make sure that they're not charging you any unnecessary stuff, you can do that as well. And then you know how to get in touch with Chief Gudgel. So either way, it'll work. But
what's the number? What's the number, Tony?
There it is right there.
Okay, perfect. All right, we're going to roll into our general membership meeting, but again, on behalf of the council, we definitely appreciate y'all taking the time to sit through this with us and kind of walk people through some of their personal situations.
Yeah.
Well, this will be put out on our Facebook page. It is a closed group, but that way people can watch the recordings later to still get the information. If you want to say the phone number, then it'll go out on there. If you don't, then that's fine too.
Yeah, the phone, that's fine.
Okay,
Yeah.
perfect. All right, I'm going to turn it over to Sergeant Weinberg, our president, to continue on with our general meeting. Sir, over to you. Thank you.
Thank you, everyone. Thank you very much. It was a very informative briefing. I've used the VA home loan 3 times. I'm actually, after we PCS, have a home right now in Iowa, still using the under VA. Other than that, this is our last general membership meeting with this executive council. And I just want to say thanks to all our top 3 members and everyone that supported us through this year. We will be turning it over at the end of the month. We do have a PES coming up and more to come on that. You will see that information tomorrow. That is the goal. So that way everybody can get that in their calendars. Other than that, I don't have anything else. Again, thank you. Thanks to the executive council and all our members. Thanks to the all the other council people and doing an outstanding job this year. So with that, I pass it back to you, Sergeant Parson, for the rest of the general membership meeting.
Awesome. I know Sergeant Canella couldn't be on today, so our VP is going to be briefing our treasury numbers. Sergeant Walker, over to you.
All right. Good afternoon, everybody. Wanted to give everyone a few updates. When we started in May of 2020, we had 50 members. Now we have 117 paid members with over a 200% increase in membership. So thank you to everybody for your support and your continued involvement in the organization. Currently for our budget, in our 2 accounts that we have $4,393. I also want to let everybody know that we have designed top 3 coins. They're great. We still have 172 of them on hand. They're $10 a piece. I know many of us just purchased some and had them sent to us. So we have our Master Sergeant release right around the corner. Great opportunity for some of you to purchase some and be prepared to present those to some new members of the top 3. With that, back to you, Sergeant Parson.
All right, thank you. Obviously, a big thing going on right now is our next executive council voting is going on. So we do have our president lined up and ready. We're in the process of our VP, and the voting ends tomorrow at 11:59 in the morning, Mountain Time. So we have 41 votes currently cast at the moment. We do have a front runner, but there's a 2-way tie for number 2, and it's 2 votes behind that person. So get out there, show support for the candidate that you want to see help lead the future of this organization. I believe Sergeant Prouty was on earlier. If he's still on. Sergeant Prouty, did you want to talk about awards? No, looks like yeah, he is on. Maybe he's busy.
I can jump in for him.
Okay, perfect.
So Sergeant Prouty, he's the one heading up for this quarter. He did send an email out. Packages are due the 17th of April. On the email, see that the template's on there. It is narrative based. It says write like a decoration, but you don't have to be all fancy like a decoration. It's just not bullet format. So if you have any questions, reach out to him or myself. That's all we got.
Perfect. Thank you very much. I know that we started this last year. We haven't had a whole lot of back and forth, but kind of ending the call. We're a little bit over our time, but if anyone has any sort of feedback or crosstalk, anything that they want to throw out there, now's the time. All right, Sergeant Weinberg, over to you for closing remarks.
No, that's all. It was a great year, and I look forward to this next council taking over and pushing the top 3 even further than the last council. And a motion to close.
All right, motion seconded. With that, we close our meeting. It is 13:13 Mountain Time, 14:13 Central Time. Thank you all for spending your last hour and 15 minutes with us. Have a great day.